Welcome, 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 everybody. My name is Tarisiro Matiza. I am a project manager at the SA Innovation Summit, and we are hosting this workshop today on behalf of the ABH team, who have been our partners, who we have partnered with for this year's 2022 competition, a very, very exciting competition. And I think I've managed to meet some of you in Rwanda, and of course I've had you in some of the sessions over the last 2 years. And really, really excited today. We've got a very special guest joining us from Zimbabwe, and her name is Shalom Gowero, and she is a financial literacy expert. And now today, as I mentioned earlier, is that financial management is a very important, integral part of our business, but for many of us, myself included, the numbers are always a very difficult aspect of the business. And especially if you are, as the business owner, as the founder, it's always if without the accounting background, I suppose, it's always very difficult to navigate the numbers, understand, the different balance sheets and cash flow reports and all the accounting stuff. But it's also a very, very valuable tool for you to understand, even if you have an accountant. It's also important for you to understand those, the various aspects of your business, particularly with the finances. So today, as I mentioned before, we are joined by Shalom Gowero, and she's going to take us through just financial management and how provide us with kind of toolkits to be able to make good financial decisions that enable the growth and success of our small businesses. Now, Shalom is an accredited financial literacy trainer, an e-facilitator and author, curriculum developer for business and financial education course. Her training focus in the past 5 years has been financial literacy for youth. Thank you. Sorry, as I was saying, she's trained over 5,000 people in various online courses and programs curated under the Finance Wiz for the Zimbabwean market. She is also, alongside the financial literacy courses, she is also an accredited national trainer for the ILO Start and Improve Your Business package. She's a Zimtrade consultant, facilitating financial management sessions for SMEs preparing to export. And she also has a book called The Personal Finance Game Plan, a step-by-step guide to effective financial management. So we are in very, very, very good hands today. And I'm also very excited to learn a bit more from the experts themselves. So just a few housekeeping. If you've got any questions, please feel free to pop them into the chat. Yes, the recording will be shared after the session once it is available. So don't worry if you miss or manage to or drop off at some point. Don't worry, we will share the recording with you. And I will not take any more of your time. I will hand over to Shalom. Thank you so much for joining us today and taking us through financial management for SMEs. I know that these are some very brilliant minds from across Africa, and and they're doing amazing things within their communities. Many of them have been finalists from the top 100 all the way up to the top 10 in the ABH competition over the last few years. So please impart some knowledge and help them kind of make really good financial decisions so that they can impart even more impact in their communities across our continent.
Excellent. Thank you so much, Tarisiro. Thank you for the invitation. Thank you for the guys who've joined us on this platform. Please, my dearest apologies for my voice. I'm struggling with an allergy, but I should be able to take myself through this whole session. As has been said, please put in your name and where you're joining us from, and maybe even what you are doing. I saw somebody who is a financial manager, and I was like, oh my goodness, well, the room is full of experts. So it's not going to be myself only sharing, I guess. But yeah, I'm excited to be here. Yeah, as has already been said, I am Shalom Guerrero, and maybe just a little bit of social background about myself. I am married. I've got 2 boys. I sent them off to their grandmom this morning so that at least I could do this session without any disturbances. I am a financial education trainer, but one thing I also want to mention is that I'm also a business owner. I run a small taxi and shuttle service with my husband. We've been running this business since 2016, probably the longest running business we've done together. And I also run a coaching and consulting business under the Finance Wiz, which is my own brand that I founded a few years back. I think now this is the 3rd year. And then, yeah, as part of my work as a financial management coach, I just want to make it clear, I am not an accountant. So yeah, some of, sort of technical accounting stuff, I saw some of the questions. I'll probably be able to say, okay, for this, I think you need to refer to an accountant because there's certain business assumptions that need to be clear for me to give you sort of like basic financial advice on it. But for most of the questions that were sent in ahead of time, I do have sort of the framework that I'm going to share with you that will probably answer a lot of those questions. And I'm excited particularly because just yesterday I was in a group of about 30 women who were under a Zim Trade session, Zim Trade program. Sorry about that. A Zim Trade program, which has, a bit of funding from the ITC, International Trade Center. And, a lot of these, small businesses are looking into, how do we take our businesses into the export market? And it's interesting because at any stage in the business, you will notice that there are a lot of issues that SMEs are struggling with. And I just wanted to share from that experience yesterday and then just sort of dive into some of the principles that I feel are very important for us, or important for anyone rather who's running a small business, that will really be able to help you to do the right thing, especially when we're looking at financial management tools and systems and structure. Okay, so the first principle that I want to share with you guys is that the business is a separate entity from you. I think at this stage, if you've been part and parcel of this huge competition, Africa Business Heroes, you obviously have come to a place where you have this understanding literally imprinted in you. But I think there are implications around this. One of the biggest implications around this is that you need to pay yourself a salary. You need to pay yourself from the business because now the business is a separate entity from you. It's got a different name. It's got a brand of its own. It's got, sort of like, a whole life of its own that it has literally now, that it now literally has. So as a result, if a business is a separate entity from you, you need to make sure just as much as you pay the bills of the business, you pay for expenses in the business, you also need to make sure that you are paying yourself a salary. And one of the questions that came through was, how do I pay myself a salary when the business isn't making as much money? And I think that's a huge dilemma for a lot of us who are running businesses. But I think it's important for us to say to ourselves, as we calculate working capital or as we work on our business budgets, we need to make sure that there's a component of it that's going towards human resources. And human resources include you, because you are a vital part of actually making the business function. So if your business is unable to pay for the human resources that is actually making the business work, then maybe you also need to sit down and make sure that all the assumptions of your business are working properly. And maybe for me to just get a pulse check from the room, in the chat box, type 1 if you pay yourself a salary right now, type 2 if you don't, and then type 3 if you take money for personal expenses as you go. Let's see in the chat box. Let's hear from you. You're putting in 1 if you pay yourself a salary. You're putting in 2 if you don't. You're putting in 3 if you take money for personal expenses as you go. I'm going to open up the chat box and see what's happening in there. I see a lot of 1s, so that's very good. That's very impressive. So yeah, and I think just to add to that, to say, you know, if you're still struggling to say, okay, how do I actually set, you know, the fee or set the salary? There are 2 ways that I often suggest. Number 1 is to say, work out how much you need for personal expenses. And then you now want to calculate and say, can my business pay me this much according to the amount that I've put as my personal financial budget? Excuse me. And then secondly is to say to yourself, you know, what sort of percentage can this business pay me? It could be 10% of the profits remaining after taking out all the money that I need to pay for running costs, etc. You know, it really depends. But I'm really happy to see that most of us in this group, you do pay yourself a salary. That's very good. As I continue, principle number 2, a business without records has no story and no existence. Apologies. I'm really struggling with this allergy today, but I will push through. So on the principle number 2, a business without records has no story and no existence. Why is this important? There's a statement by Robert Kiyosaki that I really love to quote, which says, financial literacy allows you to read the numbers, and the numbers tell the story of the business based on facts. So it's very important, and this is probably one of the key drivers of good financial management. If you do not have records which tracks money in, money out, which tracks and records what is happening in terms of the product lines that you're, you know, sort of churning out, or even, you know, your lowest months when it comes to revenue, or your highest months in terms of revenue, which means you're tracking even sales in and making sure that you are on top of the game in terms of knowing what's going on in your business. Those numbers are the ones that tell us the success or the failures of your business. So it's important for us to have sort of like track record of everything from the money in, money out to the customers we've served. At some point, based on the business preferences and how the business is set up, it's also important to include things like customer details that show us the customer preferences, the customer likes, the sort of customer orders, what do they often order. I had a conversation with somebody who we often buy our car parts from. And I said to them, you know what, we've been buying from you for so many years because we often do our car repairs as well as our taxi repairs at the same time and our servicing at the same time. So I said to them, you know, for your marketing purposes and to be able to sort of like gain loyalty from us as your customers, I would appreciate it if every 3 months you send me a reminder to say your service kit is now ready for collection, because you now have this data. You know, if you've been tracking the data, you will actually realize that for the past 4 years, we've been buying from you every 3 months a specific type of service kit, because all our cars are almost like the same make and model. So I think it's very important for us to be, you know, creating that sort of like data patterns that help us in our business and can help us to plan, can help us to come up with marketing plans that are also targeted, because now we have the information with us and we can actually use that data to run, you know, sales campaigns, sales promotions and things like that. A quick pulse check. Type 1 if you use an accounting package or if you work with an accountant. Type 2 if you do not. You're saying, I don't have an accountant, I don't work, you know, I don't use any accounting package. I'm pretty much just, you know, winging it and doing it as I go. Okay, we're seeing 1 over there. I'm waiting for a few more responses. And oftentimes when when I'm working with very basic entrepreneurs, a lot of the times, you know, there isn't some form of system in terms of tracking the amounts that they have or tracking their financial transactions. But this is very encouraging. The 4 people that have just answered have all given me a 1. Mahmoud says working with an accountant. Now, whether you're working with an accounting package or working with an accountant, it's also very important for you to keep going back. I think there was a question that came through from the questions that we sent ahead of time that was asking, how can I sort of, delegate, financial management to someone else and not be involved in it? And I think it's very, very dangerous to do so. You should be able to have some form of control, some form of monitoring and evaluation that you are doing. So even though you're working with an accountant, you need to be able to read the numbers as well, to be able to read the financial statements, to be able to read the income statements, so that you can make good financial decisions based on the data that's being presented to you, either by the accounting package or by the accountant. In fact, I'm realizing more and more that small businesses are now preferring to use an accounting package because it's cheaper, it's easier to use. You can also use it on the go, and it literally generates all the sort of big income statements and financial statements that we need. But you need to be able to read them so that you interpret them for the right sort of decision making and planning that you need to do. So I think, yeah, that principle number 2 is very important. It's one of those key drivers of good financial management. If you are not tracking, if you are not keeping any records, then it becomes very difficult for you to even prove the existence of the business. And I also wanted to share that even when you're looking at financing, looking at getting, investors to put money in, or you want to get a loan, some of the things that will make or break your case is what kind of, financial statements or what kind of records do you have in your business that can show us the success of your business, or even sort of like the weaknesses of your business. And this can either lead to you getting funding or not getting funding. So it's very important for us to make sure that we put that in place, and we are also making use of the packages that we have. Just to answer another question that came through was, what are some of the tools that are cost-effective, affordable for entrepreneurs to use in their business? Number 1, good old Excel is very good in terms of having spreadsheets that can actually help you to track money in, money out. It is a bit more manual because it means you need to have, to be inputting the data, and then also you need to then sit down and actually work out the financial statements by yourself, because it does not generate it for you. But I have noticed that there are some accountants that can develop a spreadsheet for you that connects sort of like your sales worksheet to, what's happening in the expense worksheet, all of that, sort of bringing all that together to one particular worksheet where it then generates an income statement for you, or it can then help you generate a balance sheet. But that would mean you work with somebody who's very good at Excel, and also maybe work with an accountant to create that for you. Second one is Wave. You will notice that that's the little logo over there. With Wave, it's for free. At some point, they were looking at upgrading it to Zoho, and Zoho, I think, needs some payment. And then also with Wave, there are some locations that it's not available in, but I was able to open it right here in Zimbabwe for Wave, but there are certain things I can't actually use it for. But it's great because once I enter in the invoices, the receipts, or the bills, or any expense that I pay out, or even any income I receive, it can generate for me my cash flow statement. It generates for me also telling me when, I need to follow up maybe an unpaid invoice. I've had those, invoices that may go unpaid because you're not following up. But with Wave, it actually gives you sort of a warning to say this is unpaid, this is overdue by this number of days. So it helps you to stay on the ball when it comes to, following up, any invoices that are unpaid. And this is very, very important because being able to follow up on money that's unpaid means that you're able to get money back into the business that you can then use, to pay off costs or to even be able to start generating more income from there. Number 3 is QuickBooks. I used QuickBooks for so many years when I was working in a small development finance consulting firm. And one of the things I also noticed with QuickBooks is that it's workable even for somebody who hasn't had an accounting background or a finance background. You can use QuickBooks quite well because it's all about inputting the right data. If you input the right invoice, the right receipts, the right billing, it then generates everything else for you. It's a lot more comprehensive, and I would suggest QuickBooks for companies that are now growing, and you're having, income of about $2,000 to $10,000 every month. It would make a lot of sense. If you have a lot of money in, money out of your business, it would also make a lot of sense. And it will make sense also if you've got, like maybe 2-3 different bank accounts. You want to make sure that you're reconciling the bank accounts to the cash and all of that. QuickBooks can do a very good job for that. At the moment, they also now have, the multi-currency system, which is perfect for some of us who are living in Zimbabwe, where we've got the multi-currency regime. So it works perfectly for some of us as well. And then fourthly, mobile apps such as Cashbooks. Sorry, it's actually Cashbook, not Cashbooks. Cashbook and Zoho Books. With Cashbook, if you can see on the screen there, it's actually something that's an app that you download on your phone, and you can keep sort of like, entering income in, deducting any expenses. I find this very helpful on the go. If I've got any petty cash on me, I can use Cashbook, and then when I get to the office, I then consolidate everything, in the office with my Excel spreadsheets, because I use Excel spreadsheets and mobile apps. I have used Wave, but for now I had stopped using it, and I was now just sticking to Excel spreadsheets. So with the mobile apps, they really help, because as entrepreneurs, we're often on the go. We're doing a lot of payments and transactions as we go. So those mobile apps can really help. Zoho Books is a little bit complex to use. You need to spend a bit of time learning how to use it properly. It needs you to actually set up quite a lot in terms of putting in various components before you start using it, quite well. So I think it's very important to sit down with Zoho Books a little bit more for you to be able to use it. So I think that answers the question around, affordable tools that, small businesses can use to track their monies, to stay up to date also with their finances. I also want to mention that for all these, well, except Excel spreadsheets, unless you're entering manually, like, who is the, who's the recipient and all of that, for Wave and QuickBooks and also the mobile apps, you can actually enter customer details. With Cashbook, I actually love it because you can then even pick up a contact number from your phone. If that person is maybe a supplier or a customer, you can pick up the number from your phone, and then you can actually share either a receipt or share an invoice directly from the app. QuickBooks does the same. You can also share the invoice or receipt, but you would have to download it and then be able to send it. With Wave, you can actually send it directly, as long as you've entered the right email address when you open the account. It then takes that invoice that you've generated and puts it into an email using your email address if you want to send it through, and then it can actually send that through as well. So those are really good in terms of keeping up to date with billing and sending information to your customers and clients. Then finally, I want to talk through this aspect of planning ahead. A vital component of good financial management is being able to plan ahead, working with a business budget, number one. Now, in terms of a business budget, there's so many formats and templates that you can use. But one way that I used, that I was taught in terms of working with a business budget is to say to myself, okay, how have I been, what's really been happening in my business in the past 1 month. So creating sort of a cash flow statement of what has been happening in the business in the previous month. And then you sit down and say, okay, in the following month, what am I anticipating will happen? That's how you then formulate a business budget. And basically a business budget is saying income, how much am I forecasting to make in sales, which will give me income, or, you know, how much can I forecast in terms of expenditures. Now, when it comes to expenditures, you know, the overheads are easier to forecast. These are, you know, fixed expenses, fixed costs that happen with or without production. We're gonna have to pay our rent. We're gonna have to pay salaries of admin staff, because those are overhead expenses. So with those ones, you know, you already know the kind of amount that you're needing to pay for. But now it's saying to yourself, how much am I going to use to produce enough sales that will give me the income that I have outlined at the top of my budget? And I think that becomes the tricky part, because forecasting sales can be, you know, hit or miss. And I think with time, it's something that you then develop, because if you now have data from the past, it can give you sort of indication. In Zimbabwe, we know that January is a very difficult month for most people. So usually most, especially companies that are more of, you know, luxury, you know, or they're focusing more on lifestyle products, those ones struggle a lot in January. The people that make quite a decent amount of money is people who have, you know, back to school products. They make a decent amount of money. You know, there are a lot of young people who are starting new classes at the beginning of January. So those ones make a bit of money. So they can focus that their sales are going to go up in January. But the rest may start to realize, okay, in January, it's a really, really low month. So what does that look like for my sales? And as a result, what does that look like for my cost of goods sold? Or in other words, what does that look like for my variable costs that I incur when I am producing a certain product, or when I need to make sure that I have, you know, I have bought enough to sell. So the business budget really has to do with you knowing what has happened in the past, and then you are forecasting what will happen based on trends in the past. Then secondly, there was a question around investments. How can we invest outside of the business? Typically, we are already investing in our businesses. We are reinvesting the profits we are getting into the business. But what constitutes the decision of investing outside of the business? And I feel like this really has to depend on the person who's making the decision. And I'm going to use a story based on, you know, the business that I run, which is the taxi and shuttle service. A few years back, when we started the business in 2016, our thinking was, okay, we need to get this business up and going, because there was an opportunity for us to invest in property. But when we looked at our income, it just wasn't going to make sense for us to use money from our income. So we actually started the business with the idea of investing in property. So I wanted to just share that it's very important that as we are running our businesses, what are some of our business goals? What do we want to see the business that we have, or the businesses that we have, sort of achieve outside of it just becoming successful as a business itself? What are some of your personal goals as the entrepreneur that you want to see your business achieve for you? It could be for you, it could be for your family, it could be even just beyond just yourself, it could be maybe even starting off with another business. It just depends. So it's asking yourself, what are the goals of the business, you know, or the goals that I have in terms of what I want to see my business achieving? You know, outside of it just becoming successful as a business itself, what do I want to see this business give me as an asset? Remember, when we are investing, we are taking income and converting it into an asset that can give us income in the future. So for us, we were thinking, okay, we want to be able to start a business that generates income now, so that we take that income and tie it into an asset that will give us income in the future. And a lot of that has to do with your short-term, medium-term, and long-term goals. So for us, we were thinking more of long-term goals. One of the big long-term goals was we want to be able to have property that in the event that now we want to take our kids to school, we can sell that property and we have enough to take our children to university. For us here in Zimbabwe, our banking sector, or in terms of like our investment products, are very limited in the banking sector. So for us, we have to look around alternative investments or real estate and property, land and things like that. So for us, that was the idea behind it. So even when you're thinking around what investments can I do outside of my business, this is something that you can think about. You know, what do I want my business to achieve for me or for my family? And then I break it down into short-term, medium-term, and long-term goals. Once we had finished building that property, we bought a piece of land and built that property. We are now starting to think, okay, how can we make use of this money to generate more assets for us that can be giving us money in the medium term and in the short term? So we've then ended up sort of like coming up with income generating projects around that core business of the taxi and shuttle business, because for us, we wanted to just find something that, you know, gives us extra income for lifestyle expenses like holidays, you know, so those are more of short-term goals. And then even some things like, you know, being able to buy a piece of land, but not really to build on it now or whatever, but just to leave it for maybe the next 3 to 5 years, which is more of a medium-term goal. And then we can resell and start another project again as we go. So that's an example of planning ahead. Number 3, as I conclude on this aspect of planning ahead, is this aspect of financing. To say, you know, how can I be able, I think the question was around, how can I be able to, you know, to access working capital, you know, when, or how can I be able to access working capital, because, you know, I've got a lot of people that are buying on credit, but I don't have a lot of suppliers that are willing to give me credit. So that's a whole issue around financing. And I think a lot of us in Africa struggle with this aspect of financing. Our funding models are very poor. We don't have a lot of capital that's floating around. And I think this is where financial inclusion experts and also just banks around the world have been thinking around this aspect of saying, how do we make sure that they are, you know, sort of specific financial products that help, especially SMEs, to be able to finance orders that they have. And that's where you find products like order financing. So most banks have these. Even here in Zimbabwe, we also have banks that give us order financing, invoice discounting. All of these are financing models that are meant to help you if you are in business and you have orders, but people are, you know, the people that you are supplying are actually having to pay you on credit, you know, or will pay you maybe after 6 weeks or after, you know, 3 months, and yet you also need to keep the business running, you need to keep production going. So it's important for you to think around issues to do with loans, but also to think around issues to do with order financing. That can be an excellent way for you to finance and get working capital. Yes, of course, there is, you know, getting equity funding, which is, you know, you offer someone a piece of your business and then they give you funding. But what comes with that? It may come with you giving up some, you know, decision-making rights. And for a number of us who start small businesses, we do not want that, because we started the business because we wanted to be able to make our own decisions. So sometimes going for loans then becomes better, because it means once you pay off the loan, the business still remains as yours. It doesn't then shift in terms of ownership. But again, this comes down to sitting down and really saying, what serves me the most in these scenarios? You know, one of my biggest mentors always used to tell me that, you know, would you like 100% of a small pie or 70% of a bigger pie? So it really depends, you know, on what your goals are and what you're trying to achieve in terms of running your business. So in terms of the questions that I had been given, as well as just the outline of what I wanted to share, I think I am done. I want to give it over to questions, if there are any, and then I'll hear from Tarisiro.
Well, thank you so much, Shalom. I'm not sure if you've got any other questions. I'll also check from registrations received this morning. If there are any specific questions, you're welcome to raise your hand and ask. If there's anything specific that you would like answered.
Go ahead, Mahmoud. I think that's Mahmoud over there.
Hello, Shalom. Thank
Hello.
you for the presentation and for everything. I have a question. You have mentioned that it's dangerous to delegate the finance to someone else or not be totally involved as a business owner in the finance. So how can we stay in control while we have an accountant, for example, that works in our business? How frequently should we stay in touch and to what extent? And what type of follow-up should we be involved in the process of the finance?
Okay, so depending on how your business is structured, there has to be some form of accountability around the bank account, for example. So what's going in and out of the bank needs some form of approvals. One of the companies I work for, you cannot authorize a payment and get it approved just as one person. So you send a payment for approval, and then someone else has to approve that payment. So that helps that, daily payments have some form of, approvals that, it goes through some people. It doesn't just, you don't just do a payment and it goes out of the account. That's one way. The second one has to do with setting up sort of like requisition forms, particularly for money in, money out. Sorry, for money out, not for money in, but for money out. Have requisition forms that, sort of help you to manage to say, okay, what, you're taking money from the cash box for what particular purpose. And then in terms of the petty cash, for example, doing random checks. So what we usually used to do was to say, on the petty cash Excel spreadsheet, whoever is taking money from the petty cash box, one needs someone else to sign off when they're taking money out, but there's always a random check. You don't know when it happens. So it could be, a Monday morning when, people are just coming in from the weekend, or it can just be right in the middle of the week where there is lots of pressure. And then we just say, can we see the cash box? And we sort of want to align what's on the cash box and what's on the petty cash spreadsheet to see if everything is correct. To do with petty cash as well, because what tends to happen with petty cash is that small amounts can be coming out and we're not too sure what's going on. Because it's small amounts, we may also ignore it and think, oh, whatever, it's communication or whatever, who cares? Or it's a taxi fare or whatever. But also realizing that those small amounts can bleed you dry, especially if someone does it over a long period of time. So being able also to check if the notes that we gave you, so this is something that we used to do, to say, for your petty cash, we give you specific notes. So if we're giving you 100 notes of $100 and 10 notes of $10 or whatever, when we do the petty cash count, we want to be able to see it, sort of connecting with what's on the Excel spreadsheet, the notes, the amount, and what's on the spreadsheet. So that again gives you some form of control in terms of what's happening. Then I often say every week, at least once a week, you should be able to sit down and look through everything from, the sales to the costs that have been sort of going out during the week. whether or not you are signing them off, make sure you just do one reconciliation once a week. There is a sort of template that we use under the ILO SIYB program, and it's one chart which is called the business record book, and it's got, you know, the date, the customer details, it's got, you know, money that came in or money that went out, cash or bank, and it also shows you, was this a sale, was this a cost, what type of cost, was this an overhead cost or material cost? So what we often advise is that every week just go through that one chart, because it shows you everything that's happening in the business on one page. So that can also be useful.
Okay, thank you so much. I have another question concerning the planning ahead. How can we, if there's like a specific way of assigning the budget ahead to the next year, like if there's like a form of percentage that we can assign for business, or it's up to the plan of the business itself?
Yes, you've actually answered yourself. It's really up to the plan of the business. So a lot of the things within small business finance is to say, what sort of goals and objectives do we have for the year? What sort of sales forecasting have we done? So that we do the correct allocations based on that. Because if we are going to come up with a budget, it has to be based on some form of plan that we have done. Maybe it's the strategic plan that we've done at high level, or, you know, it's the annual year plan or operational plan that we've done for the year. It literally works the same way. I teach personal finance quite a lot. And oftentimes people want to say to me, just give me a personal budget template. And I say, yeah, I can give you that. But you also need to work on what are your goals for the year, because then that determines the weighting. The weighting you put on spending, saving, and investing will be determined by the goals you have for that year. In the same vein, even for business budgets, the amount of money you're going to allocate for each aspect in the business will be determined by the sort of goals and objectives you have for the year. So if one of your goals or objectives is for you to, you know, grow your distribution centers, for example, or maybe to increase your digital visibility on social media and the like, then it means that you're going to have to allocate a specific amount towards marketing or towards, you know, digital marketing efforts. And that will be determined because that is one of your key strategic areas that you want to grow in. So that starting point is usually the difficult one. What are the company objectives for the year? And then we use that, but also bearing in mind the trends from the past, the risks we are also forecasting or thinking may come up, because also remember, we are working in an environment that is constantly changing. I'll give you an example. Next year, as Zimbabwe, we're looking forward to elections, middle of the year. So there are a lot of risks associated with that. And as a result, people are making their plans and budgets using that in mind to say, okay, if there is this type of risk, how can we factor that into our budgeting? Make sure there's a contingency plan, there's a savings that's put aside, you know, to make sure that we cover our employees and things like that. So that becomes very, very important.
Okay, thank you so much. I have a third question, but I don't want to take too much time from the others. So I can ask it at the last of the session.
Okay, that's fine.
Thank you, Mahmoud. I think part of some of the questions that you've asked are actually some questions that have come in this morning. One of them is specifically looking at, you know, like the long-term budgeting and forecasting. So specifically on forecasting, like in the long term, how does one go about that? And particularly when we're looking at, because I think for everybody, everyone is looking for some form of funding to grow their business. And it's something that investors are looking at. So in terms of, you know, putting things in place to be able to, if you kind of give us like, you know, like 3 tips or 3 steps of what you kind of need to do into putting those things in place so that you are able to forecast. And I think a lot of people struggle with this is forecasting accurately. because I've seen some financial projections and I looked at it, I'm like, surely that can't be correct. So like what, yeah, so what do we need to do what do we need to put in place for us to be able to do that accurately? And then even when we're being asked by investors, you know, we're able to answer those questions correctly.
Okay.
And kind of show that correctly.
All right, I'm going to just like reshare the PowerPoint I was using yesterday, actually, because we were talking a lot about forecasting. So I hope you can see it. Yeah, there we go. Can you see that one, which says forecasting at the top there?
Yes, we can.
Okay, excellent. So in terms of forecasting, number one, obviously you're basing this on trends. For example, when you're forecasting on sales, for example, you want to ask yourself, okay, when I'm looking at my product, what influences buying customer buying behaviors, for example. So trends such as the weather, holidays, industry specific bonuses can actually affect sales, right? But also you think around even this aspect of when we are doing forecasting, we also want to say, okay, because we have done something. So that's the second aspect. It's not just trends, it's also saying, based on what we have done on our marketing, we are expecting the following. So in terms of marketing, let's say you've been, improving your promotions, you've been working on a specific marketing tool that you can already see it's giving you impact, it's giving you results, so to speak, not impact, but it's giving you results. You can then say, okay, we are forecasting an increase in the demand of this particular product because we've been putting in the necessary promotions, or we've been putting in the necessary work around the 7 Ps of marketing to make sure that our sales can increase in the next quarter, or in the next month, or in the next year. And then in terms of, you can, around costs, you can forecast costs, particularly overheads. Overheads are easy to forecast because you know that usually they remain the same. But when it's variable costs, these can be based on changes in the market or even policy announcements. You're looking at, okay, how would this affect the cost of this particular raw material or input, for example. We at some point had an issue around, what comes into the country. So there were a lot of import border restrictions. So those policy announcements caused a lot of shifts in terms of, even availability of specific inputs and specific raw materials. And as a result, a lot of the companies were forecasting a change in costs, like an increase in their variable costs structure because of that. So you can forecast costs based on, what's happening in the market, or even policy announcements that can change availability of specific things. And then again, factoring in risks around this aspect of forecasting. When you're forecasting, you're saying, this may happen, right? So based on your environment, and we are all in various, different environments. Ours is particularly very volatile. We've got, an economic and political situation which is very, very dynamic. It changes a lot. Therefore, as a result, external risks are high. There was a season where hyperinflation was literally, inflation was in 3 digits. It still is, but at that point it was going quite crazy. And one morning the government wakes up and says, we have stopped all lending in the whole country, in the whole economy. And that really caused a lot of shifts in terms of how companies could even get financing. So as a result, it's literally like you're stopping the whole country from functioning, because if big companies can't get order financing, cannot get funding from anywhere, what's going to happen, to to their ability to produce, for example. And that caused a lot of pandemonium in our market. It probably lasted just 3 or 4 days because I think they were now feeling the pressure and the heat in the market, and things were kind of reversed. But I'm just giving you a picture of how that can actually affect even what we forecast. We may forecast that things will be great, and then something like that happens, then yeah, we're a bit of a pickle. So yeah, when we're looking at now the financial piece, like the financials that then are generated, they should all be based on these. It shouldn't just come from our heads to say, I think we're going to increase our sales by 50%. What tells us that it's going to increase by 50%? What is it that we're using to sort of justify that number or that percentage increase? So I hope that helps.
Thanks, Shalom. I think it does. I think, like what you're saying, it must be based on something and not, yeah, it must be based on something and not necessarily that we are making up numbers, as you said, in our heads. And then important to take into account the climate, the economic, political climate, but also taking into account what the trends are, and also what our customers, the behavior of our customers, and how, the trends in which they spend and interact with our product. I think that's also very valuable in terms of the focus forecasting. I'm not sure if there are any other questions. I think a lot of the questions I think you've answered. I've got here was about projections and budgeting, which we've touched on. And then, the element of, well, the last question I've got here is like the elements of a company's financial management that investors look at.
Oh, okay. Yeah, that's a good one. So I think that there are 2 aspects. I'm not an investor, but hey. Profitability is a big one. So obviously, your income statement will help show them, how you're managing your costs, particularly that difference between the gross profit and the net profit. So the income statement is a big one that investors look at, because they want to see, how well you're managing so sort of like, if your cost of goods sold is very, very high, it probably means that your net profit figure will also be quite low. And then also, is your business, overheads heavy? Things like that are also very, very important to an investor. Then I also feel like the balance sheet is also very important, particularly liabilities. Let me see, I do have something up here. There we go. So the balance sheet shows you, sort of like the financial position of the business. It's a snapshot. And usually what I often say to people, I say this shows us the net worth of your business. It shows how much your business has and how much your business owes in terms of liabilities. And the reason why this is also very important is because it shows how well you've managed the business over time. So if you have got more liabilities than assets, it probably shows that you are highly indebted, or you're over indebted as a company. So you've got a lot of loans that you've been taking for you to be able to manage running the business. And that's a very dangerous sign, because it probably means if you're going to use it to pay off loans instead of actually building the business to grow further, or buying more assets that will increase the net worth of the business. So yeah, investors will want to see your balance sheet, particularly looking at the liabilities aspect. How many people do you owe, accounts payable? Do you have any taxes that you need to remit that you haven't paid? Do you have any loans that are outstanding? That's a very critical component of the balance sheet that they'll look at. And then finally, I feel like, okay, maybe they do or maybe they don't. I'm not really sure, but I think cash flow is also very important, because the cash flow shows us, you know, the liquidity of the business. It shows us how well you are able to pay off the operating expenses of your business. So if you are constantly in the red in your cash flow, there's something not right there. Either you're selling a lot on credit, or you're not following up to recoup money back into the business. Something is not working well there. So cash flow can also be something that they look at. But I think the two critical ones is the income statement and the balance sheet.
Yes, thank you so much. I think the biggest thing that investors want to see is, as you've mentioned, is are you making money? And so if I give you money, are you able to make money? And as you said, or are you going to use that money to pay off your, your debts or your credit lines? So I think like that is essentially what they're looking at. So those are the two things, the two components that I think are important to make sure you are that at least that investors can see whether or not they can invest, and if it's an investable business. And I think one of the biggest things as well is your personal expenses. Are your personal expenses going through the business?
Yes.
And if you can see that, then again, that's also not good. And as Shalom said in the beginning, make sure that you are adding yourself as a company expense, or you are paying yourself a salary. So that you're not using the business because those are the things that also then affect your ability to find any form of funding. Yeah. So Mahmoud, do you want to ask one more question? I'm not sure if there's any other questions as well from anyone else in the audience before we wrap up.
Yes, sure. Okay. I have a different question. It's if we are running like more than one branch in different countries and different markets, which is better to have like one accountant to manage both financial both sides and stay connected and feeding each other, or to separate the accountant under our supervision?
Interesting question. Particularly because sometimes also accountants need to also make sure that they're keeping up to date with tax obligations. So if it's one person managing for two different branches, in two different markets, they need to be very aware of the tax obligations in both. So that's something you need to keep at the back of your mind. Actually, a personal story. My mother has got a company locally, and then she opened another one in a different market, in a different country. And she tried to do that actually. She had, the same accountant managing here and managing in the other market. And because she was so overwhelmed, she forgot about the tax obligations in the other market. So that became a bit of a mess. So we noticed that we needed to get someone who's specifically just standing in, even if they're just a bookkeeper level, maybe not managerial level, but just bookkeeper level, and then they keep up to date with tax obligations. And then the main accountant can then do consolidation and make sure that maybe financial statements are then put together and all of that. But I think having separate people doing it can really help and go a long way.
And how can we stay both aligned together? Is it with the supervision of the main accountant, or the business owner itself, or both?
So both have to be involved, the business owner and the main accountant. One way also is to use an accounting tool that allows you to use, 3 or 4 different users. QuickBooks has that functionality now, where you can actually find a way of giving people different access to their accounts. And they are able to create, they can create their own profile and be entering, let's say it could be invoices, receipting, income, and things like that from another, sort of like, with their own access. And then you have the business owner with also access so that they see what's happening across the different markets, and then an accountant who can do the main work. So yes, you can find, I know I'm just using QuickBooks because that's the one I'm very familiar with, but I'm sure you can even find other accounting packages that allow you to connect to, you know, to have 3 or 4 different users at the same time, being able to connect on one account and have different access points. Yeah.
Okay, thank you so much.
You're welcome.
Fantastic. I don't know if we've got any more questions that anyone wants to ask Shalom while we still have her. I will share if she does allow us. I will share her contact information with you along with the recording. If you've got any other questions that you would like to ask her.
Yeah. Hi everyone. Can you hear me? My name is Iman. I have a question.
Go ahead.
Go ahead.
Yeah, thank you so much for this session. My question is more around paying yourself a salary. So at what points do you kind of know that you should start paying yourself a salary as opposed to using your expense, so having one entity, I'll say, between your expenses and the business? And then the second question is more around what are the potential cons, like drawbacks from paying yourself a salary? So you started mentioning something around investors, but are there any others from paying yourself a salary too early or at all?
I don't think there's anything like too early, particularly because okay, maybe let me explain it this way. A lot of the times I say to people that when you're starting a business, you are organizing financial and human resources around a business idea that allows you to then serve your market or your target market, right? So at the core of that is that you are a human resource that is supposedly, that is actually a crucial and important aspect of the business. So as you start the business, in fact, in one of our courses under the ILO, the Start Your Business program, we actually get you to write down, all of the startup costs that you have in starting the business. And one of them also includes labor, right? Whether it's just you or someone else, because remember that even if it's not just you who's running the business and doing the things in the business, you're going to have to look for somebody to do the work, to actually then be able to produce and make it possible to run the business. So there isn't much to do with being, like putting money aside too early. No, I would actually say that's a vital component of your startup costs. It's also a vital component of your working capital. You need to make sure that you include human resource or labor, a labor cost to your business budget. And then in terms of how you can pay yourself a salary, I had mentioned that there are 2 ways of doing it. Either you're saying a percentage, it could be 10%, it could be 5%. If you feel like, the business is not making enough yet, to really pay me what I'm worth or what I really want, put it at a percentage, 5% or 10% every month that you're taking from the business, and you're writing that as labor cost, or you're writing that as a wage or as a salary of some sort. Because whether it was going to be you or someone else, it means you were going to have to pay that as an expense of the business. So it's part of it. In fact, when some of us do, let's say, budgets for projects, like I write a lot of project proposals, staff complement, there's support staff, there's technical staff. That's part of the project. We don't put that aside and say, well, these guys can work because, want to make sure that there's impact and want to make sure the project runs. No, there has to be that component added in as an expense and as a cost of the business. So you need to start taking it. It's dangerous for you to not take it and just be taking money as you go. That becomes the difficult part, because when an investor looks at it, then it shows that, you know, you're not, you are just taking money from the business, but you're not accounting for it. Yeah.
Thank you, Shalom. Iman, I don't know if that answers your question. You're muted if you are speaking.
Sorry, I hadn't realized. Yes, thank you so much. That was useful.
Fantastic. So thank you so much, ladies and gentlemen, for joining us today, and a special thank you to Shalom for sharing her knowledge as well on financial management and kind of the tools and kind of things to look at in this journey, and what we need to do to start looking into kind of refining all of those things within our business. As you can see on the screen, those are her details. I will share the contact details in an email following this, alongside the recording and the presentation as well. But thank you so much for joining us today. We hope that this was a valuable session for all of you. And again, thank you to Shalom for joining us today. Wishing you all hopefully a restful. Remember to rest. Rest is important. Enjoy time. Spend some time with your family, some friends, even if it's a week off. I know that we get very caught up in the rat race and in trying to make our communities better. We get lost in all of it, but please remember to rest, spend time with your friends, your family, have a wonderful festive holiday or a good December break. And yes, Ethel, I know an entrepreneur can never rest. I know, my friend, but you also need to look after yourself so that you can continue next year. So wish you a wonderful holiday, and wishing you a prosperous 2023. And we will see you all back here, hopefully in the next year. And a special thanks to my colleagues from the SA Innovation Summit, Danielle and Wendy, for joining us as well today. And we will see you all soon. Take care and have a good day further.